Okay, in this video, I am going to talk about the application of contribution margin ratio for business decisions. And if we just stop and think about what the contribution margin ratio is for a second, again, it's contribution margin divided by revenue. That is the contribution margin ratio. And with this ratio, we can make some pretty interesting observations about particular businesses and think about ways to improve operations. Okay. So the contribution margin ratio, again, is contribution margin divided by sales or revenue. All right. So in this particular example, we have a Western territory and an Eastern territory. And quickly we can see the contribution margin for the Western territory is a little bit less than the contribution margin for the Eastern territory. Now, if I look at the information a little bit closer, to me it's looking like, in fact, can I blow this up? Too much. Maybe we're saying the sale price, so whatever it is we're selling for the same price in the West as opposed to the East. And then the variable cost of goods sold for both products, it's $15. So again, the revenue and the variable cost of goods sold, they're the same for the products that we sell in the Western territory as opposed to the Eastern territory. However, it looks like the selling and administrative expenses are slightly higher for the Western territory relative to the Eastern territory. And because the SG&A, the variable SG&A, is slightly more expensive, we're getting total SG&A of $78,000 for the West and only $42,000 for the East. And therefore, all else equal, maybe there are maybe that's okay. Maybe it's just it costs more to deliver the product in the West as opposed to the East. But some of the things that we could think about could be, how am I going to reduce the cost per unit in SG&A in the West? What are some of the things that I can look at to try to reduce that? Maybe I might be able to increase the sale price in the West, right? So if the distribution channel is such that, customers in the East can't buy products in the West and customers in the West can't buy products in the East, maybe I could raise the price in the West to account for the lower contribution margin. But at the moment, I'm thinking that the Western territory is slightly less successful as the East. And there's reasons why, and it looks like it's SG&A. And then the next question is, how could we change that? And just because the East is greater than the West, that doesn't mean that we can afford to be lazy with respect to East. I think we still probably want to think about ways where we could increase the contribution margin in the East as well. Could we increase the sale price all across the country? Or can we find ways to lower the cost of manufacturing? Okay. Next example, we're selling hockey skates and figure skates. And it looks like, again, we're selling for the same price. And then it looks like the difference is in variable cost of goods sold. For hockey skates, looks like we're paying $14 in variable manufacturing costs, whereas the figure skates are $16. And therefore, total variable manufacturing is lower for hockey skates than it is for figure skates. Both regions are selling 30,000 units. Both regions have the same SG&A, the variable SG&A. And so the hockey skates are 60% contribution margin ratio, whereas figure skates are 55. And now if I want to think about ways where I would increase the operating success for figure skates, maybe I would increase the sale price. The higher the sale price, the higher the contribution margin. Maybe I would think about lowering the variable cost of goods sold for figure skating, right? So I could increase the sale price and I could try to lower the cost. And those things would hopefully offset each other to the point where I achieve a 60% margin, contribution margin, I should say, for figure skates as well as hockey skates. The other option is if I have no way of increasing the sale price for skates, figure skates, I should say, maybe I want to focus my attention on hockey skates. Maybe I'll devote more shelf space for hockey than I will for figure skates because I'm making more money every pair of skates that every pair of hockey skates I sell. I'm making slightly more money, and therefore I want to like focus on that product. Okay, contribution margin ratio.